Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, February 23rd, 2020. I wanted to get a video out early today with what's going on. So we've had pretty good sized drop, biggest drop we've seen in quite a while, and far from mere coincidence. Yesterday we had, as I had posted at the end of the day, just solid. It was in the comment section below the last post. Just solid confirmed sell signals on QQQ. And finally, Tesla, Apple had already broken down beforehand. S&P 500 had broken down before the Nasdaq 100, but I was waiting on QQQ and Tesla, and they gave us those check marks. So there we are, down about 3%, right at that little momentum-fueled overshoot of my first target at 314 on QQQ on the recent daily charts that have been highlighted, as well as I just posted this as a follow-up to the post I got out this morning that the S&P 500 futures just hit my first price target as well. Let me pull that chart up. I've got it somewhere here. Hang in there, guys. All right, there it is. That's 38.18. Same chart that's been shared for a while now. So that coupled with the fact QQQ is hitting support on the daily time frame, first target, and at the same time ES is hitting support, that gives us a elevated chance, better than 50-50 odds, enough for me to reverse positions, or an active trader can reverse positions to game a bounce. How far? I think it'll be as a bounce. Yesterday's sell signals were sell signals that I've been talking on for weeks, if not months, waiting for. And so they're good for, they should be good for more than just, one day of downside, or 2 days, yesterday and today. So that's it. So where do we go? I guess, it gets a little hard to call the micro squiggles. And the one thing that I posted in the comment section this morning with this ES chart is that remember, one of my predictions is that we're likely to see a very swift and fast drop. I mean, today is evidence of that. The big gap down, 3% down on the Nasdaq 100 early on. That's the biggest drop in many months. And it is simply based on the conditions, the fact that the market's been ignoring, shrugging off divergences and excessive bullish sentiment, and therefore you get that lopsided trade. So either way, I'll do these videos, kind of give you my micro squiggles, short-term calls. I think maybe a bounce up to that 38.74 level. For two things: if you're interested in trying to game a counter trend bounce, cover shorts, reverse to long, or maybe you didn't, you wanted to hold off, see if the sell signals, if we had some follow through, that would be, it's minor resistance, so that's a logical place for a bounce to stop. And yeah, let's just leave it at that. If depending on what you're looking at, and that's why I do these videos. If you're, a swing trader, I wouldn't be overly concerned with trying to game counter trend bounces for maybe 1% or 2. Backfill of the gap in QQQ, that's certainly a target right here. If you look at yesterday's candle, traders always love those gaps. So if you get a backfill of the gap, that would be a bounce. The Qs could bounce wherever we're at now. We're right on that 314 or just above it. That could be a 2, almost 3% bounce up to that level, or maybe even the top of today's gap. Again, I think there's a lot of trap longs in here, so I wouldn't get too cute on the counter trend bounces. In other words, don't stay too late for the party. I would err to the side of getting back in short, taking quick profits if you're going to game a counter trend bounce. And again, if you're interested in shorting or adding to shorts, those are the objective levels, the top of that gap. Then there's a gap from yesterday as well to be backfilled. So there's just quite a bit of resistance. Traders are going to flock to these gaps. Should QQQ push up more than just 3%, more than just a backfill of today's gap. And it wouldn't in the least surprise me if we fall short of that. In fact, I would bet that. That would be my guess, is that should we get a counter trend bounce here, there's QQQ, this is a 1-minute chart, it will probably, we have to turn off the, it's a 5-minute chart, I'm sorry. Let's just go back to the daily chart. We'll probably fail shy of the gap because I think so many eyes will be looking at it, so many trap longs saying, yeah, I should have heeded the warnings yesterday. So they'll probably sell before the gap is backfilled, and the shorts that want to come in would probably start shorting before that. Again, I'm just giving you my guess and how I plan to trade it, but I always say the charts are dynamic, and so is my analysis. So wouldn't be surprised at least if boom we just take out 314. But right now, that is a successful defense. The fact we undershot below it, that is 110% what I call momentum fueled overshoot. It's to be expected when you have a sharp downside momentum, which is what we had with a gap. Nothing's more impulsive than a gap. You tend to overshoot resistance, kind of like a slingshot, and then come back up. So that's where we're at right now. And again, let's just be very clear. I think there's more downside to at least this 297 target. And there's still an elevated risk, as I've talked about in recent weeks, of a crash potential, meaning a very sharp drop, very swift, 10% plus drop in the market based on a lot of the everything that I've covered in recent weeks. All right, let's just move on. SPY, there's SPY. And you can see we took out that 387.81 minor support with conviction on the gap down. So there's also your resistance overhead. But again, a lot of trapped longs, and we're early in what I believe to be a larger correction. So again, the bounces at this point probably will get sold into. That's my guess. All right, a couple other things to touch on. Bitcoin, so much for a flight to safety, out of the market asset. Technicals rule, and you would think Bitcoin would probably be going up with the stock market going down, but no, you have the opposite. It broke down yesterday. There was that back test, objective entry if you missed the breakdown, and one of the biggest drops that we've had in quite a while in Bitcoin. And if you think that it was just due to Elon Musk backpedaling on his recently bullish statements on Bitcoin, I've said it time and time again. The news will follow the charts. The charts will lead to the news. They work hand in hand. They go together. So either way, it was a breakdown, and we're still shy of the first target. So that should put pressure on. I haven't even looked at it today, but the Bitcoin proxies like Riot, which also broke down another 21% today. So, and still plenty of downside to my swing target down there, about 27. Crude oil, I'm going to have to update because I had it on the March futures, and they've rolled now to the next forward month as the continuous contract. So if I can get this here, I'll pull a chart for you in just a second. And here it is. This is a 60-minute chart. I had to roll now to the April contract because that's now the continuous contract. And nothing huge, but down 0.57% today. Certainly down, as are the energy stocks. And again, that's to be expected if the stock market goes down. So we have XOP. Intraday break so far, but it's snapped back above the trend line right there. So again, that meshes with the reason I posted those charts this morning and doing the video. If the S&P 500 and the Nasdaq 100 hit support and they bounce, well, you would expect the energy stocks, particularly because that's been one of the stronger sectors, to bounce. And there's also some minor support right here as well. So bottom line is, I still like this one very much. We're just probably going to have to ride out an early session bounce here for a little bit, and then when S&P 500 and the Nasdaq 100 break support, that's when we'll get the next leg down in crude, I believe, and we'll also take out this minor support, which was right at today's lows. I'm talking the top of these candles here, bottom of these two candles there, and boom, that's what we hit today. So we need to take that out, open the door to 72.05 and then 63.51. And here's ZN, the 10-year Treasury bond. Let's see, not responding yet, but I think it will. Again, it depends. We just hit support. We need to break that support. We say support is support until unless broken, so we'll watch today's lows. There's IEF, the 10-year Treasury bond ETF. Again, not responding to the drop in equity so far, but if we take out today's lows, which is support again on S&P 500 and Nasdaq 100. I believe that'll open the door to the next leg down, to those next targets, and then we will see, I believe, money coming in, most likely lift in treasuries, and then the VIX as well. The VIX is somewhat muted today. I highlighted VXX as one of the proxies, and it's up, but it's not up big. It's only up 1.34%. So a lot of non-believers right now in the breakdown, and again, it's going to boil down to, are they right or am I right? Are they right, meaning buy this dip, have no fear, don't load up on put protection, because that's what they're not doing right now, or you'd see the VIX up a lot more. The VIX is a, a put and call based indicator, and you can see short-term VIX futures via VXX are hardly moving up. Targets on that would be that same level. These were previous levels from previous trade, but 2140 would be my first target on the VIX. It's only going to get there, at least anytime soon, if we break today's lows in the equity market. So I'm going to wrap it up here, keep it very simple, get the video out to you guys. We just hit support. Those were support levels laid out in advance in all the videos. Therefore, the odds for a reaction were good. And I believe that will just be a relatively fleeting reaction. I mean, it could go up 1, 2, 3%. And then more downside after that, I would expect. But unless we get the breaks of today's lows, we won't have the next sell signal. We would have an objective short entry. Don't get me wrong. There's a difference between an objective short entry and a sell signal on back test, gap backfills. So those are your objective short entries. Backfill of today's gap would be objective, or break below today's lows would be objective. Either or both. Okay, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.